Now, last time we did a statement of profit or loss and other comprehensive income for the year ended that 1st March 2022, and I promised you that next lesson we do the statement of financial position as at that 1st March 2022. Now note that this question was tested in Advanced Financial Reporting, April 2022, question 4. That is KASNEB exams, last sitting, not last sitting, but 2025. Now you can pause your video and then you read the question and then we can do it together. So remember that part A we did last video, so you can just go to our YouTube and you can find the solution there. Now let's see the solution that we have from the other side, and we were required to prepare statement of financial position as at that 1st March 2022. Now for the banks, as we discussed last time, you just need to show the assets, then equity and liabilities. As opposed to the other companies, you don't need to show non-current assets and current assets, current liabilities and non-current liabilities. For banks, just show the assets, then equity and liabilities. Now, from the solutions that we have, if you compare with your past paper question, you find that the assets that we have, you have started with cash and balances with Central Bank of Kenya. The figure is 4046, cash and balances with Central Bank of Kenya. That is an asset because it is money for this particular bank. The other asset is money on demand and short-term deposits, 2150. That is an asset. Deposits with other commercial banks, 4600. Investments in government securities, 4485. Investment in equity instruments, 765. Property, plant and equipment, we got 866, because if you look at from your question, if you look at the extracted financial records of Delta Bank, you find that PPE is 7416, but from the additional information, number 2, there is revaluation of PPE from 1850 to 2500. So revaluation gain is what we entered here, 650. So the PPE, the figure is 866. That is how we got 866. The other asset is intangible assets, 4986. The other loans and advances to customers, 8144. The other asset is other receivables, 2493. We do not have any other asset. So from the information that we have been provided, those are the only assets for this particular bank. We earned all of them. So you sum up these figures here, the total gives you 39,735. Those are the total assets for this particular bank. Now we go to the other side. Remember, the basic accounting equation requires us total assets is equals to total liabilities and equity. So we need to have the other side of our statement of financial position, that is equity and liabilities, because here our total assets is 39,735. The other side now, the other figures comprising of equity and liabilities must give us this particular figure. Now we start with liabilities. Now here, remember to show total liabilities separately and total equity separately, you add them together. Now, what I have done in my solution, I have combined all of them together. It's still okay. Now, let's go to the liabilities. I have started by showing the liabilities. Now, if you go to your question, the paper which you have there, the amounts have been shown there in your question. You just read them directly. Now, this one does not have any workings. You just need to classify the item as either asset, liability, or equity. The first liability is deposits from other commercial banks. So when this particular bank receives deposits from other banks, that particular amount of money is a liability. It is not an asset. Deposit from other commercial banks, that 324. Customer deposits, 7065. Long-term borrowings, 5660. Other payables, 2717. 8% bond. Now this one, it is in the additional information. We have done some adjustments there. If you look at our last video, which we have done income statement, you find the interest, how we calculated interest there. We took 12% off 450, but here, see what we have done here. Remember, 12% was effective interest rate, but 8% is the coupon. The amounts have been shown there in your question. You just read them directly. Now, this one does not have any workings. You just need to classify the item as either asset, liability, or equity. The first liability is deposits from other commercial banks. So when this particular bank receives deposits from other banks, that particular amount of money is a liability. It is not an asset. Deposit from other commercial banks, that 324. Customer deposits, 7065. Long-term borrowings, 5660. Other payables, 2717. 8% bond. Now this one, it is in the additional information. We have done some adjustments there. If you look at our last video, which we have done income statement, you find the interest, how we calculated interest there. We took 12% off 450, but here, see what we have done here. Remember, 12% was effective interest rate, but 8% is the coupon rate of this particular bond based on the par value. So to get the 8% bond, the value, you have taken 450 bond plus 12%, which is the effective interest rate. Then we minus 8% of 450. We got 468. The deferred tax. We have also shown deferred tax in the previous video, the comprehensive income statement. And I think we showed 540, then for the deferred tax, 540 plus 650 times 30%, we got 795. Then that is deferred tax. Current tax, 870 minus 560, we got 530. Now this one you find in the additional information. This one you get in the draft statement is given by the examiner. Now these are the total liabilities: 1, 2, 3, 4, 5, 6, 7. These 7 items comprises of liabilities. So if you combine them, if you add them together, you get 2499, our total liabilities. Then the other part now is ordinary, that is the equity items now. Ordinary shares, we got 4,400 is given there. Share premium is given as 2,500. Deposit protection reserve, we have 5,000. Then retained earnings, you get this one and this one. One is the retained earnings brought forward, the one we started with, and the other figure is in the income statement, the previous calculation. So if you look at our video, the last lesson, where we have done this question concerning the comprehensive income statement, you find our profit. You get our profit, we got that I think that's 258. Then you combine them together, you get 6881. So note that one of the figures here is balance brought forward for the retained earnings. The other one is coming from the income statement which we prepared the last lesson. And then revaluation reserve 455, you are getting that one from our income statement. I think yeah, we showed the 455 is the revaluation reserve is in the income statement of previous video. So that is basically how we prepare statement of financial position of a bank. Now these ones are very simple, they are very straightforward, because you just need to understand which are the assets of the bank. So we are saying that with the preparation of the statement of financial position for the banks, you just need to understand assets, liabilities, and then equity. As simple as that. So I think we have done that particular question. We have said it is for advanced financial reporting, and that was question number 4. Now let me give you an assignment. Now you take this assignment, we check it next time. You can go to April 2025, question 5A, that is your assignment. You can take that assignment. It is also testing about banks, and then we can do it together next lesson. Now my contacts are here. I have forgotten to say my name. My name is Mr. William. I think I'm well known. So the number, my number is there. If you are outside the country or wherever you are, you can start with +254. If you are in Kenya, 0727 87 10 93. I think that will help you, so you can subscribe our YouTube so that you may continue receiving more lessons for those who are preparing for the coming examination. So we'll meet later in our next lesson, where we will be doing different chapters in advanced financial reporting.